What's going on, guys? We've got Nvidia's earnings to talk about. We have a recent jobs report, and then we'll look at some Bitcoin news. Nvidia reported earnings, they beat top and bottom line, and they gave a better than expected outlook. Blackwell sales are off the charts and cloud GPUs are sold out, said their CEO. AI is going everywhere, doing everything all at once. Maybe I'm even AI. But this has brought a lot of the AI related stocks a nice pop pre-market. It seems like it's all being taken back throughout the day here. The market is very uncertain of what to expect next. If this was a few months ago and Nvidia reported earnings like this, you would have seen a massive bounce. You would have seen an extreme amount of hype. The problem with a lot of these AI plays, in my opinion, is they priced in so much of their future growth, but that's a story for another day. They brought in 51.2 billion versus an estimate of 49.3 billion. Their gaming revenue was 0.1 billion short of their estimate. And in their upcoming earnings, they're expecting a $65 billion revenue for the fourth quarter, which is above expectations. Is it enough to keep this AI hype train running? And we also had news of September's job report. This is not October. The market might not care as much about it, but it gives us an idea. This is going to be likely our last piece of job data before the next Fed meeting. And US did add 119,000 jobs in September. Unemployment hits a 4-year peak. And also we had some downward revisions in previous reads. So my expectation is to see this be revised downwards in the next job report, probably under 100,000. We had a downward revision of 33,000 jobs to the previous 2 months. August was revised to a loss of 4,000 jobs, being the second time since the pandemic that the US economy has lost jobs in a month. Unemployment rose from 4.3 to 4.4%, which is the highest level since 2021. And as said by Eric Winograd, that's an awesome name, there's something in this report for everyone. Hawks can point to acceleration in hiring. Doves can point to the higher unemployment rate. Of course, a hawk is someone that's saying no more cuts, we need to raise rates maybe even. A dove is someone that's saying we need rates lower. He put the chances of a December cut at 50-50. But added that the Fed saw the unemployment rate as the best barometer of supply and demand in the labor market. Because of this downward revision to employment, the combined hiring from May to August is only 74,000. And as said by the White House press secretary, this strong report is more proof that Trump's pro-growth, America First agenda is already making great progress, and it will continue to deliver positive results for American families and businesses, while unemployment is on its highest level since 2021. The Cleveland Fed said this week that layoff notices surged in October. Keep in mind that that was September's job report. More than 39,000 warnings of impending job losses issued across 21 states that it tracks. This figure is among the highest since it began tracking the data in 2006. That would mean higher layoff notices than the 2008 recession. Verizon on Thursday began cutting 13,000 jobs. And the Bureau of Labor and Statistics said on Wednesday that it would not release jobs report for October as the shutdown stopped them from collecting data for the month. And some data won't be included even in the November report, which of course won't be released until after the Fed meeting. So this is all the data we've got. And the market is overwhelmingly expecting a rate pause, not a cut. A little bit better than yesterday, surprisingly. Likely because of the jobs report for September. Still worse probabilities than a week ago, a 50-50 chance roughly, and a month ago, a 98% chance of a cut, and a 0.6% chance of no cut. The market has completely changed its stance on expectations of a cut or no cut. We were at like a 98% chance of a cut, and now it's less than a 50% chance. You can see why risk on has been selling off. When a central bank cuts rates, it typically encourages a risk on environment. Investors are more willing to move capital to riskier assets. This happens because lower rates make borrowing cheaper for these companies, increasing liquidity in the financial system, supporting higher valuations and higher corporate earnings. The opposite is a risk-off environment when the Fed is raising rates, where investors are more cautious and seek safe haven assets. Particularly, growth stocks are sensitive to interest rate changes. Now, you'll see that despite Nvidia's earnings, the market really didn't enjoy this jobs report. Also, maybe Nvidia's earnings wasn't just insanely good. It was good, but it wasn't amazing. Maybe the market needed amazing. Just about everything is in the red here. And if it's not red, it's pretty much flat. Now, Nvidia does look like we have kind of a head and shoulders here. There's the shoulder, here's the head. Maybe we head lower, work towards our 200 MA. But if you were looking at Nvidia over the last few weeks and really wanting to get in, well, now it's a 13% discount from its highs. One thing we do have going for Nvidia is higher lows on the RSI and pretty much equal lows on the chart. This is only on the 4-hour. It'd be nice to see on the daily. From the beginning of this year, Nvidia is now only up about 35%. If you like the massive growth that this company has over the long term, Are you considering buying it here? Are you looking for lower prices? Or do you just DCA into solid companies that you like? We do have some interesting news regarding Bitcoin and a bill. Congressman introduces a bill to permit Bitcoin tax payments, and this will be a way for the government to add to their Bitcoin reserve. Representative Warren Davidson proposed a tax bill enabling payments in Bitcoin, federal tax payments, and allocating these payments to the U.S. Strategic Reserve. Current law treats the use of Bitcoin for payments as a taxable event. Now, I don't know who would use Bitcoin for their tax payments. I owe the IRS money, and I would not consider using any Bitcoin for that. But I guess if you have a massive pile of Bitcoin and very little cash and you owe, you could consider using your Bitcoin down the road possibly, which is just another sign of adoption and another way for the government to acquire some Bitcoin possibly. Now, if you're feeling bad for buying recent highs on Bitcoin, don't feel terrible. Abu Dhabi tripled their Bitcoin bet in Q3 before the crash, buying nearly 8 million shares of IBIT, and they view Bitcoin as a long-term digital gold allocation. There's a $518 million position at the time, and it came just weeks before Bitcoin went to a record high, the 126,000. The move is part of a broader long-term diversification strategy, and it's intended to sit alongside the fund's traditional store of value assets. Other major institutions, including Harvard, also added to IBIT in the same period. So, if you're an average person and you're just DCAing into Bitcoin, or you're buying maybe a little heavier than you should have in October at the peak, don't feel bad. There are people that have much more experience in trading, much more access to more knowledge, etc., than you do, and they're still, tripling down on their positions and such. In hindsight, it'll all play out. Maybe not a couple of weeks from now, maybe not a couple months from now, maybe it will. But, in reality, no matter what, a couple years from now, they're going to look back and they're going to be like, we're glad we made that, jump into Bitcoin. We're glad we added some IBIT. El Salvador added more than $100 million worth of Bitcoin this week. The Czech Central Bank disclosed their first crypto purchase. We talked about that last week. And Kazakhstan is building a national crypto reserve fund that could reach 1 billion. Very nice. Let me know, guys, if you got that reference. Now, looking at Bitcoin, we're continuing to hit new recent lows. Watch for this to try to establish a floor. We're a falling knife. A lot of the Bitcoin miners, a lot of the risk on is just a falling knife. They're not even trying to find support yet. Be patient. Or if you ignore the noise and you like what you see, you like the valuations, slowly add. But do know that they are still a falling knife. They're not finding floors yet. We do have Bitcoin heavily oversold. The most oversold it's been since February of 2025, which, like I showed you guys in the last video, was a buying opportunity. These death crosses combined with these oversold charts, combined with bullish divergence, a lot of confluence there, you get a pop. We've got our death cross. We've got an oversold RSI. We need to see us bottom out here. Maybe the price hits lower lows while the RSI picks up. That would be some pretty good signs that Bitcoin is about to head higher, about to see a recovery. These times of fear in hindsight are great buying opportunities. The proof is in the chart. Every death cross this cycle has been a buying opportunity. Rather than buying when overbought, consider buying when oversold. If you're buying when oversold, you're not adding at 118,000. You're not adding at 120 something thousand. You weren't adding at 103,000. If you were only buying Bitcoin when oversold, the last time you would have bought was back here when Bitcoin was in the 70,000s. You'd still be in the green. Not to mention all those other opportunities earlier in the cycle that you could have added. I was looking at the weekly. I believe I showed you guys this on the last video. Let's get these death crosses out of the way. That's the death cross. That's the death cross. And you'll notice that, we broke our 50 MA on the weekly, and you saw a reaction to that. Maybe other things as well, but looks like a big, of the first break on the 50 MA weekly, and we're selling off hard. This was something that I've been saying was important to hold up and also not find it as resistance. If we find this as resistance, that's pretty much a sure shot that the cycle is likely over. We've been talking about how maybe there's an opportunity that things go higher in 2026 and break the norm, break the typical cycle, which is definitely plausible. If we don't see this end of year run, which we have seen every single cycle so far, if we don't see that, I'm inclined to think that we will see some kind of recovery earlier in 2026 than we would otherwise. For example, in the last cycle, we topped out in 2021. Right in November, we topped out in 2021. We sold off. We found the 50 MA as a resistance. Once we broke it, you saw a heavy reaction to it. We tried to recover it. We didn't, and we sold off very hard. This is one thing you can expect if we find this 50 MA as resistance, is probably a hard sell-off. And then we bottomed out here in 2022 of December. 2022. The end of 2022. We started recovering in 2023. If you base this last cycle off this cycle, then we should be, bottoming out in the end of 2026. It might be more like mid-2026. One thing also to consider is we broke all-time high earlier than we have in any other cycle. Part of this was probably because of the spot Bitcoin ETF hype. But be that as it may, you know, it seems like this cycle was kind of ahead of schedule. One thing you could do if you want to be really, really patient is keep an eye on the weekly RSI. While we are not oversold yet, when you get to oversold, typically you're in the bear market. I mean, this doesn't happen often, guys. Last time we saw it was in 2022 in the bear market, $15,000. You saw it first at 18,000. You actually saw a, come on, let's say it together, bullish divergence. You saw that the RSI hit higher lows, and you saw that the price bottomed out soon after when we already have bottomed out on the RSI beforehand. You see that higher low, lower low, and that was the RSI divergence that marked the bottom. Oversold weekly. In hindsight, fantastic opportunity to add. I mean, if you only added on the oversold on the weekly, you'd still be up about 5x on your Bitcoin. And again, you know, another time that we were oversold on the weekly was the other bear market after 2027 peak here that ended in the end of the year 2027. Did I say 2027? 2017 peak here that ended at December. We bottomed out here in December of 2018. It took about a whole year after the peak to bottom out. Since our peak possibly, maybe not, is here in September, maybe 2026, September marks the bottom. Maybe things don't start recovering until 2027. But you have to take advantage when there's fear, when there's pain. Just like you need to take advantage when there's greed and when there's hype. When everyone is saying this is going much higher, when everyone's saying iron's going to go to $150, guys, buy at 70 and you'll get a double. When you could have been buying at $5 to $10 and making multiples. Don't get caught up in the greed, especially when there's limited upside. I mean, just because I was saying we might top out at 150K, that's my price target that I've had for months. That doesn't mean buy in heavily on an overbought Bitcoin at 110,000, 120 something thousand. How much more of a percentage are you getting from there? That's greedy. You wanted to acquire during the crypto winters. You want to buy the Bitcoin miners during accumulation phases, during times that they look so bad, during times that they're oversold on weeklies, on dailies, etc. Oh, and I got distracted. One thing I wanted to mention is, you know, this area was a resistance. We kind of dropped under it. It became a resistance. You got the break over it, and it ran on a reaction to that. Bitcoin might be trying to establish a support here. This would be great to see Bitcoin try to level out here. If it doesn't hold this roughly 87 area, we're probably heading down to 74, which was a previous resistance point, and we did wick down all the way down to it. I think we could see 74, 75 if we break this level we're at here. The weekly gives you a good idea of certain levels to watch out for. Here's another example. This was a previous resistance point and a support. Once we broke it, big reaction to it. I'm sorry, there's a little crooked, but you get the gist. This was a resistance, it bounced, became a support, and it failed as support. And you see an accelerated reaction, and it brought us down to the next level. If we break this, we're likely heading to the next level. If we break this level, we're likely heading to the next level, yeah. Maybe this one's like 67, but maybe the 2021 peak. But how are you guys feeling today? Are you taking advantage of the beaten down stocks? Are you waiting? Do you think the top is in and you're just gonna like hope to snipe the bottom? Are you gonna accumulate during the pain? Just like you want to sell, trim into the greed, sell into the greed, not try to snipe the top and snipe the bottom, because usually you'll be wrong, but trying to accumulate when it's attractive and trying to trim when things are a little overextended, let's say. But thanks as always for watching, guys. Let me know what you think about Nvidia earnings. Let me know what you think about the job report. Of course, it's become very unlikely that we're going to get a rate cut in December. That doesn't mean the Fed is done with their cutting cycle. We're likely to see cuts in 2026. Of course, you know, we also depend on inflation coming down. If we can see inflation start coming down, the Fed will definitely be quicker to cut rates, because they do want to be there for the job market, especially if things start looking even worse. If unemployment continues to rise, which it's at its peak since 2021. If we see, you know, this September job report being revised down like all the other ones basically have been in the last couple of months, those are the things you want to look out for. We need the Fed to save the market, basically. We need the Fed to cut rates at the right time. There's always that fear of recession, the fear that the Fed's too little too late. But let me know how you guys are feeling about all of that. Thanks as always, and I'll see you on the next one.